Hello again and welcome back to London. It's time to take an in-depth look at the currency market. I've been chatting to Miles Eakers from Savvy Trading. The last time we spoke you were short yen, and credit to you, it's worked out well for you.
Yeah, definitely, a little bit further than I anticipated. We've got some nice weekly levels on a lot of the crosses. 111.14, not quite reached on euro yen, and then Kiwi yen and Aussie yen, and I think there's a bit of value maybe having some short positions. It looks a bit overdone up here. I think there's going to be a couple of weeks now as we wait to see what the Bank of Japan do. Maybe see a little bit of a retracement. I still think there's value in buying dips, but maybe not quite up here at the moment.
But in the longer term, do you expect it to weaken further? Because really it's bucking a trend of a number of years at the moment.
Yeah, definitely. I think there's always that anticipation that is this actually a good opportunity to get short for the longer term, and it does depend on what happens in the Bank of Japan. And obviously if you look at US 10 years, they are pushing higher, which invariably should push up dollar yen as well. So I think at the moment the trend is long dollar yen and short yen trades, but as you say, the longer term, like weekly, yearly trends are very bearish for the dollar yen and other yen crosses.
So last time you got it right with the yen. What other currencies and pairs are you looking at the moment?
I'm watching Euro, Aussie and EURCAD. I think if we look at the situation in the US at the moment, if the data starts to improve, I think you see dollar strength, which should weigh heavily on the commodity currencies. So I'm looking at basically being bullish against the euro, against the CAD and Aussie. I think EuroCAD is testing this 130 area. I wouldn't like to be long up here, but definitely on dips around the 125, 126, maybe 127 area, and Euro Aussie on a break of the 125 up to 130.
But from a trading perspective, does the fiscal cliff make it very difficult, because that could change everything?
I think it'd be a shock event, and if it happens I think you take a step back and reassess. But the market is a more complex macroeconomic picture, and I think a lot of people get focused on singular events like the FOMC, but a trend is developed over a lot more variables than just the fiscal cliff. So I think wait and see what happens, and then if it does come out that they resolve the fiscal cliff, I'm sure the market will react in completely the opposite way as everyone anticipates.
And you were telling me that you were looking at the S&P as well?
Yeah, definitely. We've been quite bullish on the S&P since breaking out some key Fibonacci levels. 1425 was the Fibonacci for 61.8, and we broke through there on the FOMC announcement, but as everyone was long, we kind of took a step back and waited for a dip to re-enter into a long position. We were looking at 1420 and then potentially the 1400 with stops below the 1395, and we are positioned now for a longer term trend back up, potentially to test the 1474 and even higher up to 1500.
Well, Miles Eakers speaking to me there from the offices of Savvy Trading. That's all we have time for right now. Goodbye.